Yeah, morning traders. If we take a step back, I think a lot of people are still catching their breath from the moves that we saw in China equities yesterday and Hong Kong equities. I think one step is that we still saw 12.6 billion renminbi playing through or flowing through the northbound connect. That's a staggering amount of capital flowing into mainland equity funds. And obviously we saw that in the price action. The CSI 300 was up 3.5%. Small caps rallied very strongly indeed. I think the CSI 1000, which everyone's talking about at the moment, was up 7%. The tech index was up 6.7%. So more sort of mainstream markets that we see business in. The Hang Seng was up 4%, closing pretty much on the highs, and the H shares as well up nearly 5%. Now our call for those markets is a bit stronger. We are expecting the Hang Seng to open up about 0.5%. That's going to be really interesting. So once we see the unwind of the cash markets, do we see follow through buying and a continued push higher? Obviously, a lot of people are saying a lot of these measures that are being put in place are to do with Lunar New Year, and obviously they want to pump up the stock market ahead of that situation. So yeah, we may see follow through buying playing through. It'll be interesting to see there. And our call for the ASX at the moment is up about 90 basis points as well. So we should see some outperformance from the ASX 200. We're going to see underperformance from the Nikkei. There does seem to be this trade when China's down, you tend to see the Nikkei rallying and vice versa, but we're expecting a little bit of downside in the Nikkei on open playing through. Now, if we have also, let's see, the spillover into European equities, we saw some pretty positive price action intraday in the Euro stocks and the DAX as well. A bit of a weaker open. The first 2 hours were down, but then we saw buyers stepping in, and we saw a really strong trend going into the US cash open and into the close, where these markets closed pretty much at their highs. And we can also see breakouts or very small breakouts playing through in Euro stocks and the DAX as well. So those markets looking pretty strong. The FTSE's looking pretty strong. And so I think that's not just a Euro affair. That's actually, the markets there are rallying in all currencies. So we'll see if we can see some follow through buying. But those markets may see some outperformance in the short term. US equities have been pretty messy. I mean, if you have a look at the intraday chart, we've been seeing on S&P futures, it's sort of just oscillating around VWAP for most of the trading session. The cash markets, if you have a look at those, again, very, very choppy price action playing through, closing pretty much unchanged. Tech's been underperforming. We've seen the materials space looking pretty strong, and REITs have done quite well on the session as well. And breadth has been okay, but generally speaking, it's been a bit of a chop fest playing through in US equity markets as well. Now, we have seen a good bid coming through in US fixed income all the way across the curve. You can see 2-year treasuries down 7 basis points at the moment at 439. 10-year treasuries at 408, down about 7 basis points as well. So good buying playing through. Really from cash equity open, we saw the buyers playing through there. And I know people are saying that Mester's comments may have moved the dial, and also Kashkari, and a very, very strong 3-year bond auction. They auctioned off $54 billion there. Very, very strong indeed. Great demand. Very low tail, but I think most of these moves that we saw in fixed income happened well before all of these factors took place. But yeah, whether you're looking at nominals or a big move down in real rates as well, I think that's resonated across asset classes. And you've certainly seen that in the US dollar. The dollar has fallen on the trading session. We're trading a bit weaker in the Dixie, following what we've been seeing in US bond yields. You've seen a bit of a range of 107.62, 107.23 in the euro dollar. But the high beta currencies have obviously fared a bit better in this situation. We've seen a bit of buying coming through in the Aussie dollar, the South African rand, the NOKI's worked quite well, probably backed up by a little bit of upside playing through in the crude price as well. But generally speaking, you've seen high beta plays working well. The Aussie dollar looking strong. That isn't a reflection necessarily of the RBA. I think if you look at the correlations you've been seeing, it's really been a dollar move than anything else. It's sort of moved in tandem with the Kiwi dollar and also the pound and all those other currencies as well. So put this down to what we've been seeing in sort of the US dollar move, which of course is just a reflection of what we've been seeing in the flows in the fixed income as well. Now that slightly weaker US dollar and that slightly the move down in rates has boosted the gold price. You're seeing a gold price up at 0.5% at the moment. We have formed an inside day, so the body of the candle is still very much inside the prior day, and that needs to reconcile itself out there. So for the price action analysis out there, it's one to put on the radar. We are watching the RBNZ, or the Kiwi dollar. Just after I'm saying this, we are going to be seeing the employment numbers there, so that could be interesting. So obviously watch those Kiwi exposures playing through. There's not really much else to watch out through Asia. So we are watching those Chinese equity markets for follow through buying. I think we could see some further big moves playing through. So obviously watch those ones and trade it with Pepperstone.